The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome, everybody. This is Dave White, and another wonderful day at the headquarters of Technical Trading and Investing. I'm going to have to turn my audio off for the engineer because all I hear is 14 echoes coming back. So anyway, we've got an interesting day out here. We are up 14 points up now with 2 billion shares on the consolidated tape. And that is, that is interesting. 2 billion shares, not a lot for 2 o'clock. And that will be very interesting. So, I'm going to go through a lot of news out here today. Not a lot of volume. Certainly have a lot of news, or a lot of price action here, which is kind of interesting for a day like this. You'd think with the president coming out with his speech tomorrow night, the Fed getting ready for their taper, we'd see a little shyness. Even if you were bullish, you'd like this thing to pull back down lower on lighter volume and once again prove the point. A little tough. Anyway, we're going to go to news. And just to remind you, it was on this day in 1850 that California became the 31st state in the Union. It did it without ever becoming a territory. They just did it all. And how many people do you think lived in California in 1850? And I'll give you just a second to think about it. Well, the answer, 7,200 people. That was it, and now it is the most populated state in the country. And, of course, very interesting, what is it, like the 9th or 8th biggest economy in the world if it was just a single state itself. So a huge amount of economic activity out there. But on this day in 1850. So interesting. I don't know if it's going to change much out there, but there is a UN Intergovernmental Panel on Climate Change report was seen by the Mail on Sunday. It's led to some scientists to claim now the world is heading for a period of cooling that will not end to the middle of this century. And there's an accompanying article about this has been the coolest winter or summer in the Arctic, and a huge amount of the ice has already come back. I have a feeling that predicting global climates is probably more difficult than predicting the stock market. The other things that are a lot of interesting things going on around the world. Australia has a new conservative leader. It is Tony Abbott, and he won big, and he is pushing out the Labour government, which is the more liberal of the side. His new sign is under new management. They are most of the people down there are decrying years of turbulent rule. And failing to, after making all this money on natural and basically selling gold and copper and everything else that they've mined out of Australia, and being able to actually show anything for it. The government effectively gave a huge amount of money away and has attracted a huge amount of the kind of Indonesia. It's kind of their Mexico for us, and they brought in a lot of people that, especially with the social benefit contract they have with their people, is just killing their country. And they've taken a huge left turn, or right turn, I guess, right turn, And they are basically, he's going to say, I'm business friendly, come to our country and start mining and digging again, because, of course, a lot of that money over the last 6 months has turned weak on them. But I think China is going to continue to be their biggest customers. But they are hanging the shingle out that says we are going forward and going to be a pro-business country after about 6 years of being and thinking about going to the European Socialist democracy. I can't even say it. Democracy kind of a company, and he's pledged to basically tear all that stuff down from the last 6 years and go full capitalist. Goldman Sachs, the chief economist, over the weekend is talking about a scenario where many of our clients are preparing for imminent loss of central bank control. He's basically saying that at this point, the improving economic conditions around the world will force interest rates up no matter what the central banks decide to do. And I always thought that the markets were bigger than any single government, and I don't know if this is really news other than the fact that we've got some large people on Wall Street actually talking about it. The econ calendar this week, we've got job openings and labor turnover on Tuesday. Probably not going to be huge. Jobless claims on Thursday, a little bit more. On Friday, we get a hat trick. We've got producer price indexes on Friday, retail sales on Friday, and consumer sentiment on Friday. So I think for the most part, we're going to have the big move of this week, probably late this week. The iPhone event is going to be starting tomorrow at 1 p.m. Apple was bouncing fairly strongly already today. And, it's I guess it's the same thing. It's kind of silly to think that a company one day to the next, just because everybody knew they were coming out with a less expensive iPhone, that it really is any kind of news whatsoever. But we've got some people out there that are beating the Apple drum once again, and they are normally one of the better companies out here for actually being able to press the PR flesh fairly extensively. And I have a feeling if you look behind this, there's more than a little bit of icon pushing this. Of course, he's got a huge stake in this. The question is when he gets out. I don't suspect that he's a real investor. This is a trade for him, and he'll push the stock up, or is going to try. And one of the companies you can put a lot of money in because of the huge market cap and still be able to get some out. The federal officials are preparing to reduce the maximum size of home mortgage loans eligible for backing by Fannie Mae and Freddie Mac. Currently, mortgages that have balances as high as $417,000 in most parts of the country and $625,000 in expensive housing markets, including parts of California and New York, and as much as $721,000 in Hawaii. This is the so-called jumbo loan, and what they're talking about doing is continuing to start bringing that level back down and forcing those borrowers into traditional loans. Probably a good thing and an easy way to get off some of those bigger loans if they had to take a bigger hit on a single home loan going bad for Fannie Mae and Freddie Mac and FNMA also. But it's unclear right now what they're saying. The rumor is that they're going to try to cut this somewhere around 10%. So if we were looking at the housing market, we're probably going to look at the high end of the market having a little bit more pressure on it than the lower end in the probably coming months. It looks like this is going through and will probably be in place in the next 3 months, if not sooner. Monday, China's high court determined that people whose rumors are reposted at least 500 times or viewed at least 5,000 times would be liable for prosecution. They've got a big problem in China, and people tweeting all kinds of bizarre and sick rumors that are totally made up. And now people that have been hurt and reaction of society has been strong, demanding with one voice a serious punishment by the law for criminal activities like using the internet to spread rumors and defame people. It's just kind of interesting. I just thought, what would it be like here if that actually was true? And you could go to jail for it. Itty Bitty Minds, International Business Machines, plans to move about 110,000 retirees off its company-sponsored health plan and instead give them a payment to buy coverage on a health insurance exchange, and a sign that even big, well-capitalized employers aren't likely to keep providing the once common benefits, as medical costs continue to rise. We've been looking at IBM shifting more and more people out of the United States, and even at this point, it's I don't know, 20 years ago, everybody said IBM was the company to go to work for. They were going to treat you right. You could work with them and be employed for them the rest of your life. Kind of the 1950s General Motors. You could go to work there and retire 30 years later idea. Looking a little bleak out there if you're an IBM employee. But just a sign of the times, and certainly a lot of these bigger companies, especially for the retired people, are going to be more than happy to shove this off on the government insurance exchanges, which, by the way, still aren't set up. And I guess what are they going to ask for another 4-month extension to actually get those up and running into next year? But it'd be interesting. There's only one IPO coming out this week. That is the North America. It's an American soda ash production business of Korea's OCI Chemical. It's going to be small, $100 million. One of the reasons I didn't think that there was going to be a lot of push in the market this week, and a little bit surprised. Normally, they want to have a very bullish market going into IPOs, and they're more than willing to tell their fund managers to hold off if they can and buy into an IPO week. They make a lot more money on IPOs, and of course it's your money in their funds, not theirs, and they're more than willing to manipulate markets that way. But just one single IPO, which makes me think that we can still see a pullback probably to the 1620 area by Friday. Just another merger Monday. We've got Molex, a company I've been familiar with forever. If you've ever plugged anything in a computer, there's a little 4-pin connector known as the Molex connector. But they are bought out, and I think it's up about 32% over Friday's closing value. Maybe even a little higher than that. I haven't looked at it in the last hour or two, but everybody's thinking, well, maybe there'll be one more buyout offer. These guys make all the connectors, or a lot of the connectors, used on just about everything. So when they're doing well, the Silicon Valley, at least the hardware section of
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
To Scott in Arizona. How you doing today, Scott?
Hey, Dave, it's actually Don in Scottsdale, Arizona.
Okay. Fantastic.
That's fine. First of all, I want to tell you guys I really appreciate. I watch your programming all morning long before I go to work, and I'm kind of a new trader. I've done well in my 401k buying into the Oppenheimer gold precious metals since I thought that was the only good option. I subscribed to Tom's Gold Report, but I also bought your Art of the Charts trading software, and anyway, I'd like to buy all these different newsletters, but when you're a small trader, it's difficult to justify the expense. But I kind of got myself in trouble here buying a bunch of contracts. I have like 80 contracts on J.P. Morgan Chase in my small 14,400 IRA that's now become 12,800. And
puts or calls?
I bought puts the last 3 or 4 days.
Okay.
And I kind of chased it on the way up. I'd buy some every day, and I'd listen that the market's weak and it could go down. And so I thought, well,
which month did you buy?
Well, I bought September. I bought September strike price of 50 and a strike price of 20. So yeah, I have kind of a short time frame here. Yeah, to work with.
Yeah, I don't know. I'm you're in expiration week already. Normally, I would do two things. One, I wouldn't be buying up before the Wednesday, the week before expiration. You are a new trader, so are you familiar with the option market makers going delta neutral?
I heard you mention that on your last show on Wednesday, right?
It may have been Wednesday last week, but yeah, this Wednesday they're going to go delta neutral, and it's the equivalent of arms dealers selling to both sides. They don't care who wins; they're going to make out, right? So what they're going to do is they're going to buy and sell positions. They're going to buy and sell puts until they get to the point where there's really not going to be a whole lot of loss for them, no matter what happens in the last 8 days or 7 days of trading. And at that point, they can hold a market up and trot out enough people in a particular company to make sure that it does well. They can come out and get 20 analysts to say that the thing's going to the moon, and all they need it's a racket. I'll agree with that. But what you want to find out is whether or not they are going to do that, and you really don't have that opportunity. So I would recommend doing one thing, and that is if you're going to buy puts and calls, you want to wait for the expiration, especially within 2 weeks before they expire, that you wait at least until that Wednesday and late in that Wednesday to see what they're going to do and how they're going to push the stocks. And until then, you really don't have a good clue of what's going to happen a week from that Wednesday. So
yeah, right now I'm kind of stuck.
Go ahead.
Yeah, right now I feel kind of stuck. There's only $900 more I could lose on the $3,000 investment.
Yeah.
If the market tanks, maybe I could recoup.
You got two things. You got the president coming out speaking tomorrow night. You've got several things that can save your bacon over the next few days. The biggest problem, and this is one of the things, I don't know how long you've been listening, but one thing I hate to do is short companies that control their own stock on the stock exchange. Not only do these guys have their own traders, they're trading their own stock.
Yeah,
so it's not. I had to learn this the same hard way that you did.
And the banks have been propped up with all this too.
Unfortunately, they can prop themselves up almost indefinitely until the Fed starts pulling money out. But even then, they have huge amounts of money to fall back on, and they can use other people's money as need be. So here's the first thing I would say. If you look at the chart out here, this thing came within 2 cents of the low of June 24th. That had 30 million shares. You got into it with 23 million shares. So that was your first sign not to go short this thing. Whether or not it was put or call, I wouldn't be short this thing right now. There were better fish in the sea. Now, the question is, what do you do with it? Your fortunes are not going to change that much in the next couple of days. You're probably going to have to make a decision late Wednesday on whether or not you're going to get out of these things. And I think that's going to be what you're doing. Can you hang on through the break?
Oh, I sure can. I was going to look at Confluence and some things with you on this chart.
We'll be back in just a minute.
Thanks so much, Dave.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And hopefully we still have Don there.
Sure do, Dave, and okay. I really appreciate it.
Okay, let's go through a few things. First, I wanted to show you, if you go to Wikipedia, okay, there is a page on there, and it's just delta neutral.
Okay.
And there's a lot of math involved on that. You don't have to understand it all, but do understand that there is a day. It used to be called a Wall and Chuck Wednesday, and there was a pretty good trader named Wallenchuk who started noticing about in 1995 that on Wednesday, the week before expiration, that they started buying and selling and moving cash positions around to make sure that the sensitivity they had was minimal with the last 7 days, just because the losses could be way too high. And that is part of the problem. The other thing is that 85% of all options go unexercised. That meant that just randomly, if you bought puts and calls, you have an 85% chance of them going to zero by expiration. So one of the things, especially when you're new, that's more important than making a lot more money on options is making sure that you have a chance for your position to play out. And certainly buying options for this week's the coming 2-week expiration generally isn't enough time, especially on a big company like this. On smaller companies, maybe going into earnings where you have a chance of a huge move, probably better. But these companies have a very good chance of going out flat into expiration. And I'll try to remember, or maybe call in on Wednesday afternoon. Probably Thursday would be better. And we'll look at the curve on J.P. Morgan and figure out where they think that stock is going to expire. But you need to really make a decision by about noon on Friday, because they're going to pull out all the premium that's left of that thing for 3 days at Friday about noon.
Okay.
You understand that part?
Yes, and I kind of want to. You mentioned that with the low on June 24th, it had a lot more volume, and when it went back down into that low, it had less volume, and that's one reason you wouldn't have bought it?
That's correct. I wouldn't have been short this thing. It basically had 30 million shares, came into it with 23 million shares. Granted, it didn't break it, which I'd like to have seen for a signal to actually go long. But also the energy has not been all that bad back on this pop up here. That being said,
5.2.
Huh?
I see 5.2 on your power vector. I thought that looked a little bit weak, but...
Well, that's compare it to the move from July 24th all the way down to August 28th. It's only gone, what, a third of the way? And it's almost got more power than this whole move down did.
Okay.
So, when you really want to compare apples to apples, here's a good example. You've got this one from $50.11 on June 24th up to $56.93. Then when it came back down, here's a second reason not to have shorted this. What you're comparing is almost an identical move, almost with the identical time span, and the energy was less on this last leg down.
Oh,
it was
yeah.
7.9 on the way up and 7.3 on the way down. There just wasn't – I could have expected this thing to test the low on lighter volume, and it did. And that was, just in the last few days, you would have seen that thing probably ticking it at like 7 or 6.9. And there just wouldn't have been a lot of reasons. I probably wouldn't have gone long. I would have liked to seen that low tested with 15 million shares to go long.
What about that confluence? Do you see that on the retracements?
There is a confluence level. We're right at it.
I know, and that's what I saw.
Yeah, so that's the one good thing. The problem is you bought the 50s, right?
Yeah, 50s and 49s. But with that many contracts, I don't need it to change much going the other direction just to recoup some money,
Yeah, but you're going to need now, here's the one thing that can save you, and that is a huge move in the VIX. And without that, you're probably, even if it gets to 50, they're going to suck the premium out as it goes down as quickly as it gets back to 50. So, like I said, you need this week, probably by Friday, to have some bad numbers come out and the market really take a hit, because not only do you need this stock to move down, but you also need the implied volatility of the general market to come up. Either way, it's going to be extremely tough to ever see that you get your $3,000 back. Normally, if I had your position, it was worth $900 today, I would probably hope that I could get $1,500 out of it. Okay.
I do see some supply lines, if I help me read this out of the charts right. Back on June 21st and June 20th, I kind of see, now am I reading that right? I see some nice large volume supply lines that thing's still not at the top of yet. Could that help me out possibly?
No, it's the only thing that helps you out at all is that this thing hit confluence. That is it. Okay. There really isn't anything else out here that really sets up anything better than that for your confluence level. And let me pull this back down just a couple of lines here. See if we can get this cleaned up just a little. Now, that's going to probably be the best demonstration right there. But, you've got a very thin confluence level. You've probably seen the top for expiration, I suspect, today. And but this can go all the way sideways until Wednesday without much problem. So, like I said, what you need is some kind of surprise. These guys are extremely good at defending their stock. If it does start to get under some kind of pressure, they'll have 20 people on CNBC telling everybody about how this stock's going to the moon.
Yeah, that's true. Well, I think...
And why they're selling, or somebody else is selling that, and they're telling everybody it's going to the moon, why they're selling exit stage left, it just doesn't leave you enough time. So I would, especially, you said you're a new trader, some of the things that you should know before you get into a trade is that you should have, especially in options, I would love for you to have at least 4 weeks, if not 6 weeks, to let your position play out.
Okay, I'll do that, and I wish I would have done that too. Very good. You're not expecting it to go much higher, but you're saying they could play it out sideways for quite some time.
They can bleed you all the way to expiration, and I suspect that there's a better than even chance that's exactly what they're going to do. Now, what you can get is one big blowout, maybe Tuesday and Wednesday, on whatever the president says. Could go the other way on you too. But I have a feeling Wednesday is going to be a big move. President's going to be talking tomorrow night at 9. And, the market hates indecision. And if it's still up in the air what's going to happen, we could see a nice bleed out here. Seems kind of ridiculous, but we just have very, very light volume today. And that makes me think we could get once more into a big gap down kind of day out here. I wanted to look at the volume right now, see what I had. We're basically turning 2.3 billion shares. And we went through 1666, which I thought was kind of surprising today. I thought that would be the top of this move. If we close back below that by the end of the day, probably a better single move. There is a way to play options when you do get into the last 8 days, and that is to figure out where the market makers would like to push that stock. And I'll be talking about that Wednesday. Have you listened before when I've brought up what the options are telling at least the market makers think where the market's going to expire a week from Friday, that kind of thing?
Yeah, I've listened to that before. A lot of it goes a little bit over my head, But
let me put it this way, because I know there are people new. There's a book called The Wisdom of Crowds, and it's all about asking a lot of different people about their opinion on something. And one of the preeminent tests for doing something like that is called the marble test. And you go into a bar, you get a big gallon glass jug, like you put iced tea in, and you fill it full of marbles, and you ask about 25 people how many marbles are going to be in it. And you're going to get some doofus that says one guy that says 1 million. But if you get about 25 people, for the most part, you're going to probably come within about 3% or 4% of the actual marbles that are in it when you average out everybody's opinion.
Sample size, huh?
Right. That's part of that sample size. But there are a lot of people guessing is not a bad way to look at it. And you can go back and see how much money is going to be lost and how much money is going to be made for all the puts and calls, and add all those up together and find fairly close to the average. And it doesn't do it every time, but a lot of times where there's a lot of options available on stocks like Apple, and especially I like the SPYs to give me a good idea, because there's enough money bet on that to get a very accurate idea of where at least the market makers think.
And that's what you thought if I call in on Thursday, you might be able to give an idea where the market makers think this is going.
Well, not only J.P. Morgan, which is probably a little less important, but the general market. Because this thing, for the most part, is a market-following stock. I bet if I went and put this thing in Excel and used the correlation function in Excel, I bet this thing probably comes right in and close to about as good a correlation with the broad markets as any stock out there.
Yeah, it seems to follow the Dow pretty well, you know.
Yeah. So that's another issue that I dislike. I want one that is not so hooked to the market, or I would have just gone ahead and picked the puts on the SPY over an individual stock like this that could have a surprise. I like the confluence, but here's where you would probably be making any bet if you were going to go short on this, not over the last few days. And as you would go into options again, like to see 45, 60 days on a single-sided position, just especially on one like this. But you busted just about every single rule I have, which is I don't short stocks that have their own trading floor. So this, Goldman Sachs, J.P. Morgan, all those are tough stocks to short, because you'll see them pull out every dirty trick in the book to make things happen and keep their stocks up. And they do it for a living for everybody else, but it's their stock and their money, and they're the most vicious at doing it themselves. So it is a tough business to be in. And like I said, it's probably marked this up to a very good learning moment. I've probably learned more by losing money than I've ever made by making money.
Well, so, I brought that IRA from $10,000 to $14,007 in a month with the gold stocks, and the 401k made $4,000. So I guess sometimes you give $3,000 back on a learning experience.
Yeah, that is true. But the other thing is, especially if you're new, this is a long-term game. You don't need to be pushing money up. You can learn the same amount with one contract that you can with 10.
Yeah, so, I need to start doing that more.
Right.
And
start off small. There's no reason. Everybody at one point in time has done what you've done. The difference is how you learn from it and how somebody, how that does. I'll look for your phone call on Friday.
Dave, I really appreciate it. I might put an advanced order in or something that if I get a bounce down in the market, sharp pullback due to some kind of news or something.
Yeah, can you watch it?
In there to save me some money, huh?
Can you watch it over the next few days?
Actually, I can watch it tomorrow and the next day.
I would sit there and have your orders ready, but don't put them in, because guess who gets to look at your option orders?
Oh, yeah, the market makers, huh?
And guess who's sitting there? The guy from JPM, right? You're trading against the guy you want. I wouldn't be showing my cards too early.
Okay.
I got to go to Brent, and thanks for the call. I got to go to Brent in Martinez, California. How you doing today, Brent?
I'm doing great, Dave. How are you doing today?
You still there?
Can you hear me, David?
Yeah, I got you now.
Yeah, how you doing today?
Fantastic. So what's your question today?
About Stratasys. Well, I'll talk to you after the break.
That's good enough. I've been kind of short this side, but we'll catch you on the other side here.
Okay.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back from Brent in Martinez, California. Are you there?
Yes, I am, David.
Okay. So you're looking at Stratasys, and what's your question on it?
Well, unfortunately, I just missed a trade this morning. I tried to buy when it opened this morning. Got close to 108. I was trying to buy the 100 October 100 puts on the thing, and so I just kind of missed that. But just wanted your opinion on where you think it might head to here on this little downturn and where it might settle out.
I think this thing's headed down to $100. I mean, you're not that far away now.
Yeah, that's the problem. I wanted, obviously, about 108 or 107.
I'm short another one in this space already, and got a good run on it already. We're shorting the newsletter X1 at like $71, and to me, that is the weakest horse out of all these. And I would probably say that if you get an opportunity for the bounce, you might want to look at that one. That one just had 80% of the shares from its IPO become tradable, and it's going to be much weaker than the rest. None of these Stratasys or DDD or anything have done well in any of the earnings the last 2 quarters. And my question is, I just think that these things are wildly in front of where they're going to be. I'd love for these things to come back, base out, and be able to buy them long-term again. But these have been fairly parabolic stocks. Stratasys has just been a little bit better. You could get one more chance of this thing getting up to that 110 area, and there I think if it fails is where the wheel's going to fall off this one. But I think this one has a whole lot less to fall than maybe X1, which could go to $29.
Yeah, I kind of agree with you. If I ever had a chance to buy this thing down in the 80s again, I'd do it for sure.
So you've got a lot of mush, which is one thing on the confluence levels. If you're watching on Tiger TV or in the den, there isn't a real sharp level of where this thing's going to find support in confluence. And what that means, especially if you're short, is a lot of times you get into that and it's just really kind of muddy and it bounces around and takes a while to go through those levels. And that's the problem, is that you get into those and it just becomes, if you don't have enough room right off the top, you had $13 possibly maybe off the top before this thing got into the first gap, but into high volume, which is the thing I just like about this one too. You had on August 8th, you had 3.5 million shares, and that's right back in here where that gap is, and I suspect that's right where this thing's going. The high of day on that was what was it, 99.50. So I think that you're going to find this thing comes right back to $100 on expiration. I suspect that's what's going to happen. There's a lot of stocks like I was talking about X1, doesn't have enough puts or calls, so you don't have an active market maker in on that stock, which is another nice thing. If you've got stocks that have a lot of puts and calls on them, a lot of times you'll have an activist market maker trying to hold it up through expiration. That's another thing that makes me think that one may be a better rise. So I would probably look at either X1 and secondarily DDD, because I think both of those had weaker earnings than Stratasys, although I like DDD long-term better. It's just that all the acquisitions they've made that'll be good long-term are going to hurt them short-term for a while. So I would just look at that. Maybe catch one of the other names, try to look at them as a better, faster horse. Thanks for the call, Brent.
Dave. All right, take care.
We will see you all tomorrow. Same bat channel, same bat time. See you then.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.